Okay, let's talk now a little bit about accounting control and terminology, okay? Accounting is a way of communicating business information. Financial statements may look complicated, but they contain the information necessary for control, planning, and for coordination of the business. A successful business depends on the owner's ability to react to change. Financial statements give us basic tools to analyze the business. The primary goal of the accounting process is to arrive at an estimate of the periodic income and expenses of a business. Okay, the owner, having this information at hand, can then take that information and make decisions to maximize his or her company's profit potential. It would be ideal, obviously, if every contractor had an education in complex accounting, but it's actually not necessary. In other words, putting financial statements together shouldn't be the contractor's job. But interpreting and understanding what it is, you must understand it. Therefore, we'll go over some of the fundamental accounting terminologies that you'll have to know, basically, not only to run your business, but obviously to pass the test as well. So there's some terminologies that come in there. One of them is basically accounting methods. There's a few different types of accounting methods. One is called cash basis. Cash basis accounting. This method recognizes when revenue is cashed. I'm sorry. Recognize revenue when cash is received. Basically, once I receive the money, basically now I recognize the revenue as it just came in. Also, it recognizes expenses are recorded when they are paid. So I made a check, I sent it out. Now, basically, that's recorded. So it's on cash basis, in and out. It's basically like you run your, another way of thinking about that is basically how you do your checking account. You know, you write a check, money's gone. Money's received, you get the money, you deposit it, money's in. So that's just recognizing it when it's received and recognizes when it's gone. That's cash basis accounting, okay? Little bit difficult. Basically, it's difficult to have those that kind of accounting basis for construction. But there is the next one that they have is actually accrual basis. Okay, listen to this one. Accrual. This method recognizes the revenue when it is earned, which is not necessarily when it is received. Okay, because normally a lot of times you may finish a job, you may be completed, but you haven't received that money because it's now done. It may take 10, may take up to 30 days to get paid, but nevertheless you recognize it because you finished the job and and so you basically put it in before the actual money is received. Also, in a similar case, the expenses are recognized when they are incurred, not necessarily when they are paid. So I received the bill. That bill may be due in 30 days, but I recognize it right now, even though I'm not going to pay it for 30 days, but it gets put into the books right away. And then it basically recognize it right away, but I don't necessarily have to pay it right away. Okay? Oftentimes, accounting is further modified on longer term projects using the following methods as well. So if you got a longer project, a lot of times you may run one of these methods as well. It's called a percentage of completion method. This method of percentage of the profit and losses on the basis of actual work accomplished on each job. For example, if the work performed in a given year is estimated to represent 50% of the total performance under contract, then 50% of the estimated revenue and profit is considered earned. So again, at the end of that particular year, you didn't complete a contract, but nevertheless there was a percentage of that completed, and that's what basically your income is basically taken in at that particular year. Another way of doing on long contracts, now that may go on for over a year or so, you do a completed contract method. One would be, which again, this method allows you for a gross income related to the cost for each contractor to be reported in the year when the contract is completed. So therefore, you started the contract, let's say July 2010. You didn't finish it until July 2011. Now you don't recognize any income coming in until July 2011. Then you receive everything gross. You report everything to the 2011 taxes. Nothing under 2010. That's completed contract method. Percentage contract method, or percentage of completion methods, like I said earlier. Whatever percentage you completed in that year, you basically count it as income for that particular year.